Both National Bank of Canada and Royal Bank shares trading in record territory today. National posted a rise in fourth quarter profit. It was boosted by its wealth management segments. And RBC also saw higher earnings and it's hiking its dividend. Let's get perspective from Tim Regan, Managing Director at Kingwest and Company. Great to see you.
Great to see you as well.
Can we start off with the biggie, Royal Bank? Anything investors should bear in mind here?
Looking through it, and it's a company we own, all I have to say is they're a well-oiled machine. The integration of HSBC has been fabulous. In all their different markets, they're doing very well. They're increasing their business. When I say incrementally, they're doing a great job of it. So nothing really pops out in this other than the fact that they're doing great and they're a well-oiled machine, and we're happy.
My brother's an accountant in Ireland, and he was telling me yesterday that he's moved all his money from a traditional Irish bank to an online bank just to get the lower fees. Is that a threat to the established Canadian banks?
Well, if you look at it, there are different banks like EQB that's coming out with earnings later on today. That's more of a virtual bank, if you will, or an online bank. But a lot of them, if you look through it, they're going to have their mortgages, their deposit bases, but really where they're growing a lot, capital markets, wealth management, RBC, and the regular brick and mortar business won't fall off. Is it going to take some incrementally? Sure. But if there's a good online bank that they see competing with them, they'll just buy them.
Yeah. Should they be allowed to, I wonder? But that's another question. Yeah. Wealth management, what a beautiful business, though, because you get fees whether you underperform the market or not.
Yes, I mean, this is a business we're in as well, but, it's been a great year. It's been a great 3 years for wealth management. Mm-hmm. And right now, I think everybody's just sitting back and looking at year end, mm-hmm. worried about what may happen. But it's the old adage that Wall Street climbs a wall of worry. Yes. And that's what we're seeing right now.
Yeah. Would you put new money to work in Royal Bank?
Yeah, absolutely. New long-term money. Mm-hmm. I mean, if people wanted to, make a pass in the next year or so, who knows? But the next 3 to 5 years, Royal Bank's just going to be the juggernaut it's always been.
Right. And it does look as though the HSBC thing was digested fairly flawlessly.
Fairly flawlessly. And then, on the other side, you're going to ask me about National Bank and Canadian Western Bank, now their portion of Laurentian. National Bank seems to be doing a great job at it, too. And National Bank is now getting the scale to make even more money.
Yeah. And then, of course, National has that deal to pick up a lot of the assets of Laurentian, yes. but not the liabilities, the messy branches that they'd have to close, etc.
So it's a great deal for Fairstone and for National Bank.
Is it an oligopoly, banking in Canada?
Oh, we've always said it is, and if you look at it now, National Bank is part of the Big Six. You do have smaller banks, but they have to pick their niches. But, where else do you have a banking system where they earn, return on equity of 15 to 20%? That's pretty good. If it was a regulated utility, they'd move that down a lot. But, that's the price we pay for a strong banking system.
Yeah, it's interesting. Yeah, you pay for security in that sense because the return on equity would be much lower on their U.S. operations or return on capital.
U.S. return on equity cap in the banking business is 10 to 12%, which is normal.
What about EQB? Maybe we can put up a 5-year chart for EQB because that one has come down. There are some, they've had management turmoil, they had tragic death of the CEO, but there are some concerns about loan losses.
There are, and they've taken some. But as you go forward, as you can see, some of it is as well when it turns over, people were calling for, the end of the mortgage market that EQB plays in. Mm-hmm. We don't think that's happening. They're well capitalized. They're doing well as a business. And we think that going forward, you can look at it well beyond 100 in the next 2 years, mm-hmm. well beyond.
How are you treating the market now? Are you, the problem often is when you get a small group of stocks leading the market higher, somebody like you, your prudence says, well, I don't want to have too much of my portfolio in there.
Sure. Well, right now, we've done a little selling, so our portfolios are about 10% cash. Mm. But how we look at it is you don't have to do anything right now. We feel we have great companies for the next 3 to 5 years at the right price, and we can just sit pat where we are today. And if something happens, we can ride it out. If something doesn't happen, we keep going up. I think today, being worried about the market is something that more and more investors do. And as that happens, counterintuitively, that's when markets tend not to implode on us.
Because people aren't piling in other words.
Yeah, it's when everybody's piling in and everybody tells you on this show that the markets are great, buy forever, then please worry.
Right. Have you got a prediction for us for 2026? Is something coming? Is there an iceberg out there, do you think?
Oh, my crystal ball. I have to get on. Yeah, you know, it's funny because everybody asks us what's the market going to do next year. And if I came and told you 20%, people would gasp. But if you look at the markets in any calendar year, if it's up on average 20%. If it's down on average 10%. So if I was going to tell you it's up, 20 is the best guess. Not 10, but 20. So, but I have no clue, nor does anyone else.
No, it's the old random walk. Tim, thanks very much.
Thank you.
Tim Regan, Managing Director at Kingwest and Company.